Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 14th of May. So we finally saw the volatility return back to the market this week. We saw some wild swings on some of the key indices, and even the dollar index had a bit of a resurgence when the majors started to move around a little bit. So we'll jump straight into the charts and see what we can find for today and early into next week. We'll start out here with the Aussie USD. You can see that it had its little bit of a push up above 78, but came crashing down very, very quickly and found support at the 77. So no surprises that we do find it sort of in the mid 77s again here, 77.27. But look, it's a very, very important zone, the 70-cent zone. Okay, we talked about this several times over the last few weeks. You can see that it did break down past it, but then quickly closed above it again on this daily candle here. This is the daily chart. So that also coincides with the 50 moving average. It's pulled up to the 50 moving average now. So yeah, finding itself in a bit of a waiting pattern really. The 77 cent is very, very important. I wouldn't be looking at shorting this one until we get a clear daily close below that 70 cent zone. But for now, you can see right through here, look at all of the wicks that held it up. Even here for weeks at a time, it touched the level and then bounced off it. Even right through here, touched it, bounced off. It's a very, very strong level, and it's going to always be respected. So even though it came down so hard, it still pulled it up. So until we get a clear break below this line on a daily close, we're not going to try and attempt to short this because it's just going to be too difficult. You're playing with fire. So really, it's back in the middle of that range now. We're just going to probably look for scalping opportunities in between this range and just go to the smaller time frames and look for those opportunities. I still like it though. I mean, if you go to a 1 hour, you're going to look for that change of trend here. You can see it bounced off this level. So a change of trend on a 1 hour, a series of higher highs and higher lows. If we get a new close up here, then we've got the lightning bolt effect that we're looking for. MACD is in your favor, and you can start looking at maybe longing it back to that sort of 78 zone, or at the very, very least 77.80, maybe even up to the 200 will probably get the job done, which will be around that 77.80 zone. So not bad trading, but you've got to wait for the confirmation on the 1 hour to give you the lightning bolt effect. All right, we'll move over to the US dollar CAD now. This one's found a little bit of a bottom here. You can see it's had 3 days of effectively halting the big rut. It's pulled up quite nicely there. It did have a crack today or through the New York session, but it's pulled back a little bit now. But it is over that all-important 121 level again now, and looking like it wants to find a little bit more movement up. You need to go to a smaller time frame to really understand it. You can see that we've got a series of higher highs and higher lows here. It's tried to push up higher. What we want to see now is probably a pullback, even down to here. This wouldn't be a bad level because it is a little bit of a mini roll reversal zone, and it's also the 20 moving average. So if it pulled back to the 20 moving average and that roll reversal zone, it might give us an opportunity on a 1 hour chart to take this one long. Not a bad look. The good thing about this one is it's got plenty of upward movement. Okay, so if we do get that long, you can get all the way up to the sort of 122.80 in the first instance, and even all the way up to 123.20. There's plenty of room to move once it gets past this level because it fell so quickly. So any momentum on the way up is not going to be halted by previous support, which is always a good thing when you are looking at going long. So you want to see that close. Ideally the 4 hour will close above the 50 moving average here, but probably the price action on the 1 hour is the most important. We want to see maybe a check of this level here, and the conservative entry would be to probably wait for it to break this level here. But if you wanted to get in and try and get in on this trend, I'd be getting on the pullback here to the 20 moving average, that little mini roll reversal. Failing that, the super conservative entry would be to wait for an hour close above this level here, so above the 122, and that gives you about 80 to 100 pips of pretty clear motoring. All right, we'll move on over to the US dollar yen now. This one had a really, really good move up as well. You can see that it took full advantage of the volatility. You had a very, very big breakout candle there, broke past all the moving averages, and of course that key 109 zone as well. Look, it finds itself at a point of resistance again now. You can see it was resistance over here and here. So no surprises that it's pulling up a little bit at this point. But I think the market's taking a little bit of a breather. It's had some pretty big moves this week, and it's probably just finding a little bit of support and resistance at certain areas on some of these majors. This is no different here around that sort of 109, sort of 50 area. You go to the smaller time frames, and that's going to be your key. You can see that it's resting right on all of these tops here on the 1 hour chart. So if it is going to go long and you're going to take a long position from here, it's probably around this level that you'd want to be looking for it. But again, I'd want to be seeing a change of trend. I want to see a 15-minute at the very, very least change of trend on the way up. At the moment, it's all down. A series of higher highs and higher lows, break up above this level here. I'd like to wait on this one. I think it's got more movement in it anyway. So ideally in a perfect world, you know, up here around the 110.50 is probably the real target. So what you want to be waiting for potentially is a bit of a change of trend on the smaller time frames at around this level here, a break of this high, and then you can trade it for that 60 or 70 pips up to the promised land, which is, the 110.50 should be pretty easy sailing once it gets past this level. This was always going to be hard to get past here. So really, I wouldn't mind waiting for it to actually do that and close on probably on a 4-hour chart would be ideal. Maybe a 1 hour if you're trading the smaller time frames. But if it does that, then momentum's definitely come back into this pair, and it can easily push into the 110.50. We've had a lot of trouble, but again, you've got to get that confirmation. Once the momentum picks up, it's a pretty good one. It usually continues on the US dollar yen. All right, we'll go over to the dollar index. The all-important dollar index had a good bounce as well. It found a little bit of support around this level here. Ran into the resistance though at 90.80. We know how strong this level is. We've been talking about it forever. You can see all the way through here, no exception this time. It did touch the 20 moving average. Okay, so look, for all intents and purposes, if it was going to continue the short, this is probably where it would have bounced back down to. And realistically, if there wasn't as much volatility in the market and this was trading a little bit more steady, I would probably be looking for shorting opportunities from this level. But I'm just a little bit cautious that the S&P we'll touch on in a minute is still being a little bit volatile. So look, if you want to be taking the aggressive trade here off the 20 moving average, and this roll reversal zone is your key opportunity to take this short if it is going to continue. Again, I think it found support here. I'm a little bit reluctant to actually short this one in this instance because of all the other things that are going on. But if you were going to, this would be the place. Of course, if it does break above this level and closes above the 91 on a daily candle, it means it's going to be above the 20 moving average again. And starting to look pretty solid again. So that's the two movements that you want, either a break above the 20 on the daily, at which point you'd be looking at longs, or if we start to see weakness on the smaller time frames and a bit of a roll reversal, so maybe a change of trend on the 1 hour, and you see a series of lower highs and lower lows, then you can take it short off the 20 on the daily. But of course, the trade you'd be taking is the euro in that instance, the complete opposite. You can see here that it is resting right on that point of support. No surprises there, of course. The 20 moving average is holding it up. So it's of course the reverse of the dollar index. So we know this. If it's going to go, if it's going to go long, it's going to go long from here. I think the logical target's probably that 121.80. It's not it's about 100 pips. So it's not a bad trade. But I'd be waiting for a change of trend confirmation. So I want to see a 1 hour series of higher highs and higher lows. You're still going to get a reasonable amount of pips. You're still going to get you probably 60 or 70 pips out of it. So that's not a bad trade. We're not going for a big long trend break at the moment. We're only trying to scalp. So I think it works out quite well. So you need the lightning bolt effect on the 1 hour on the euro at least. Series of higher highs and higher lows. It'll be above these moving averages at that point. MACD is in your favor, and it's coming off a really nice level of support. So your trend is up. You got the series of higher highs and higher lows. You got the 20 moving average bolstering it, and you got the benefit of the support right through here as well. So not a bad level, but it needs to do the job before you get into it. But a very clear target of around 121.80 to get this one out. So plenty of pips to be had. If you wait and you're patient, you should be able to get 60 or 70 pips out of it if it does the right thing. All right, we'll move on to spot crude now. We'll have a quick look at this one. This finds itself at a level of support as well. It's done the whole roll reversal thing. We've got the resistance, and now it's finding support. It's also got the 20 to back it up. Look, for me, this one's done its job now. Like we've got two good trades out of it. It's reached the levels that we've needed it to over the last few weeks. I would probably just rather wait and see on this one now. Let the volatility settle down throughout May. I'm not so sure it's providing a really, really good opportunity, mainly because of, like I said, what's going on with some of the major indices. You've got to be a little bit careful with some of these commodities. Sometimes they can be a little bit too volatile. It's at support, there's no question about that. So if you're really keen on the long, this is the area that you would be going along. There's no worries about that, but I'd be waiting for a change of trend on at the very least a 1 hour. I wouldn't be taking anything less than a 1 hour. Series of higher highs and higher lows off this level, and the clear zones to be taking it to around that $65, $66 mark. That's where you'd be aiming for if you get that change of trend. But again, it's one of those ones where Yes, it is support. Yes, there is a 20 moving average there, but again, I would be waiting for the key roll reversal. I mean, look, it's not going to go up unless the 1 hour changes anyway, so you might as well be patient and wait for it and have the momentum on your side at that point. So wait for a change of trend. If you're hell-bent on trading it, wait for a change of trend on the 1 hour, wait for the series of higher highs and higher lows, and then you've obviously got a very clear target of around that $65, $66 mark. Pretty good trading in that zone, but for me, it's got to prove itself now because it's already done its job, and now it's, that's a pretty big weak candle, and I would want to see a change of trend on a smaller time frame before I started getting excited about going long on that one. Failing that, if the daily closes below this level and you get maybe a close around that sort of 63 or a little bit under, then you can start looking to the shorts again back to this zone here, which is around that 58 mark. All right, let's go over to the S&P 500. This is the one that's where all the action has been this week. You can see we had a very, very big week of selling, 3 very, very big days, broke through all the key moving averages, had a bit of a resurgence today, but we would expect that. It's not going to continually fall without at least some sort of a pullback retracement. If we take a Fibonacci to it, we can probably, I'd say it's probably going to be a 31.8 pullback, I'd imagine. Or close enough to. It's a 50 pullback. It's sitting at the 50 at the moment, the 38.2. So look, it's in that zone. You want to be going to the smaller time frames now. It's pulled up to the 20 moving average on the 4 hour. I did notice that, and I thought that was not a bad place for it to pull back to. It even went to the 200, but realistically, the 20 is the more important one in this instance because this is the one that's actually tracking price for what it's doing. So if it's going to, reverse, this is around the level that it is going to reverse from. It certainly had a big push up. I think it's going to be a very interesting night tonight. How it finishes the week is going to be key for the S&P. If we have another weak night and it starts selling to the lows again, we can probably expect a pretty weak end of the month. You can probably bank on it going down a fair bit further next week if we get the big drop. So realistically, it's just a case of waiting and seeing on this one. You want to wait and see what happens at the end of the week. Hard trade. If you want to scalp it, the scalping area is probably happening about now. Like I said, we know that we're in a key reversal zone. We've got the moving averages. We've got the Fibonacci. So a series of lower highs and lower lows on a 1 hour will probably get the job done. So we've got a bit of a pattern happening here already, but it's got a bit of work to do. But if we get a close maybe at the 40.80 again on a 1 hour, you can start looking at shorting it again to the previous lows. But if we do, the candle that really interests me is going to be the next daily candle. Not so much this one. This one's obviously returned, but if we get a candle that basically replicates what this one did and manages to close below this in tonight's session, you can expect that it's probably going to continue to sell off next week. So that's going to give us the key drivers for the movement of the next week's action. So like I said, scalping opportunities to the short. The long, I'm a little bit reluctant to be taking it long until it settles itself down. The short's the better trade because it has pulled back to a good level. It's got a lot of trouble in front of it to actually continue to go up, but the short has already moved down to a certain level that you'd be pretty happy taking it down to, me being the 140 sort of 20 area. So not a bad trade if you want to try and do it. I'm a bit more wait and see on this one. I'm looking at the longer game, looking at next week's trading. Very, very interesting. Look, if tonight's close gets above this level and closes above the 20 moving average again, then we're going to start looking for longs again and start longing it into the previous highs. So realistically, it's all about where this daily candle closes over the weekend. That's going to reset us for next week. If we get the negative one and closes below here, we'd expect a negative week next week, and we'll be looking for shorting opportunities every time it touches it. So I hope everybody's had a great week's trading and you've been able to take advantage of some of these moves. We've had some pretty good setups, and some of the key drivers that we were talking about have hit their levels. So hopefully you're able to capitalize from that, and we should see some more volatility hopefully next week to get us into some reasonable midterm trends. Have a great weekend, everyone. I'll talk to you next week.